This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE and Raleigh Goldsboro Recycling, February 5, 2018. Last week, commodity prices and economic reports were mixed. U.S. steel production rose slightly, remaining on track with last year's production, but ahead of 2 years ago. Imports of finished steel were 27% of the market last year, hurting domestic producers. Oil fell $2 a barrel to $68.26, near the multi-year high of last month. High U.S. production is helping offset OPEC's cutbacks, which are trying to keep prices up. U.S. oil production rose to near an all-time high of the records of the 1970s, which is great for U.S. jobs. Iron ore fell $1.50 a metric ton to $73, near the multi-month highs on slight growth of supply and demand. Scrap ferrous prices were steady, with indications prices will be steady for the remaining of the month as increasing demand is being met with increasing supply. Hot-dip galvanized steel remains at $9.42 a ton on good demand and higher raw material prices, with word of more increases coming. Copper fell 2 cents to $3.18 on good supply and demand, along with the dollar taking a big leap up on Friday. Copper's up 4 cents this morning to $3.22. The 5-year chart shows copper remains slightly off the recent 4-year high on good demand and supply. Copper inventories rose as supply continues strong, remaining near the multi-year highs, putting downward pressure on prices. Aluminum fell 2 cents to $1, near the 5-year high, as global manufacturing and construction remained strong. Aluminum LME inventories fell to another about 8-year low, as production has not been able to keep up with demand. LME inventories are 80% below where they were 4 years ago, but overproduction in China is still viewed as an issue. Nucor Steel released terrific profit data for 2017. Profits were up 66%, which was aided by a $175 million boost due to the Trump tax cut. Their shipments to outside customers were up 9%, and they were able to get a 15% price increase, which was needed due to a 35% price increase in scrap metal and scrap substitutes. Well done, Nucor. Good job. China's Purchasing Managers Index, while trending up, fell in January to the lowest level since May 2017, as new orders rose at a slower pace and confidence fell a bit. New export orders and employment fell, but importantly, raw materials stocks fell as well. The U.S. created 200,000 jobs in January, so unemployment stayed at a great 17-year low of 4.1%, but the low number makes it a bit tougher to find skilled labor. The good news is that the unemployed and the underemployed, which are those that are working part-time but want a full-time job, is actually 8.2%. So there's room to get these people into the workforce without major inflation. The U.S. dollar was near a 3-year low early in the week, but jumped on Friday on the solid jobs report, which had interest rates rise. U.S. factory growth based on PMI showed the strongest expansion in January since March 2015, as new orders rose the most in a year. The rate of growth was the highest in a year as well, led by the best demand in new orders in a year, creating inflationary pressures, though, on materials and transportation costs. But backlogs also increased. January's U.S. vehicle sales decreased to an annual rate of 17.12 million from 17.9 in December. Sales remain robust, but have been declining, and U.S. manufacturing of vehicles remains trending down as Mexican exports to the U.S. continue to set new records. Wall Street's Dow Jones average fell a hard 1,096 points, including a 666-point, 2.5% drop on Friday. The good job creation has interest rates on the rise, which takes Wall Street stock prices down. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.